If you're looking at your crypto portfolio right now and all you see is a sea of red, trust me, you are not alone. It's easy to feel a little bit anxious. But what if I told you this whole downturn might actually be part of a predictable cycle? Today, we're going to cut through all that noise. We'll break down exactly why the market is falling, and more importantly, what the data from the past suggests might be right around the corner. Let's get right into it. Yeah, this is the big one, isn't it? This is the one question on every single investor's mind. Why is everything falling apart, and when is the next pump going to get here? We're going to tackle both halves of that question, using historical patterns and what's happening globally to find the clues. Okay, so the first thing you've got to realize is this. What's happening with Bitcoin, Ethereum, and all the altcoins, this isn't just some simple random dip. It's actually a symptom of a much, much bigger story that's playing out across the entire global economy right now. So to figure out where we might be going, we first have to get a really solid handle on why we're here in the first place. Let's unpack the global story that's hiding behind this massive crash. And when you really look at it, it all boils down to three huge reasons all hitting at the exact same time. A serious cash crunch, some massive profit taking from the biggest players, and just a general wave of uncertainty all over the world. Let's dig into each one. First up is something called a liquidity crunch. Basically, when the US Federal Reserve keeps interest rates high, the dollar gets stronger. Now, why does that matter? Well, it means big investors can get safer returns in other places, so they start pulling their money out of what they see as risky assets. And guess what's at the top of that list? Crypto. It's often the first thing to feel the pain when that river of cash starts to dry up. The second reason, this is a classic crypto story. It's all about profit taking. You see, after those big pumps we saw back in April and May, the really large investors, the ones we call whales, they started quietly selling off their holdings and locking in those huge profits. They got out near the top, which then left a lot of smaller, retail investors to buy what they thought was just a small dip, only to get trapped as the price kept falling. And third, you just can't ignore the bigger picture. When you've got geopolitical tensions flaring up in the Middle East, a major economy like China slowing down, plus all the unpredictability that comes with a US election year, well, investors get nervous. And when investors get nervous, money runs for safety. It flows away from risky assets like crypto, and that causes the market to either stall out or, like we're seeing now, turn bright red. Okay, so that's the why. That's the heavy stuff. Now for the million-dollar question that everybody really wants answered, the when. When does this thing turn around? When does the recovery actually begin? Now, obviously, no one has a crystal ball, but we can look for some really powerful clues in past market cycles to get a potential roadmap. And if you look back, history shows us a pretty clear pattern. After a major dump, like the one we're in, there's usually a 60 to 90-day recovery phase. Think of it as the time the market needs to find its footing, shake out all the fearful sellers, and just stabilize before it can make its next big move. This timeline here kind of lays out the potential path forward. Right now, we are smack in the middle of the major dump phase. What history suggests could come next is that 2 to 3 month recovery period. That's also called the accumulation phase, and it's when the smart money often starts to quietly buy back in. This whole pattern is what leads a lot of analysts to believe that the next real window for a significant pump could open up sometime between October and January. So if that's the potential timeline, how should you be thinking about your own strategy? Because not all coins are created equal, right? Especially not in a down market. Here's a really simple way to think about risk. This table is a great way to categorize your portfolio. At the top, in the relatively safe tier, you've got the giants, Bitcoin and Ethereum. Look, they might not give you the most explosive pumps, but they are the most stable when everything is crashing. In the middle, you have your strong medium-risk altcoins, projects like Solana or Polygon. These have solid technology and a really good shot at a strong recovery. And then you get to the bottom, the high-risk, high-reward plays. We're talking meme coins or the newer AI tokens. These are the ones that can give you those insane 5x or 10x returns, but they can also drop 70% in a heartbeat. It's a high-stakes game down there for sure. But beyond which coins you pick, the single most important tool you have in a market like this is your mindset. Success isn't just about what you buy, it's about how you think when it feels like everyone else is hitting the panic button. And I really want you to let this sink in. A red market, a sideways market, even a boring market, that's not bad news. In fact, these are the exact conditions where the biggest fortunes are often quietly built. While the crowd is running scared or just isn't paying attention, this is when smart money is calmly accumulating assets at a huge discount. So how do you navigate this with a cool head? By sticking to 3 incredibly simple rules. Rule number 1, no FOMO. Don't emotionally chase a coin just because it's pumping. Rule number 2, no panic selling. Do not sell at the bottom just because you're scared. And rule number 3, honestly the most important of all, always do your research. Never, ever invest your hard-earned money in something you don't truly understand. So we'll end on this one thought. The market moves in cycles. The red days do not last forever. As history has shown us time and time and time again, the pump always comes back. The real key isn't trying to guess the exact day or the exact price. The real skill is learning to see which way the wind is starting to change before everybody else does.